Hey guys, Eli here, and on today's video I want to talk about how to buy a stock when the stock market is crashing. Last week I made a video called Why Am I All In on Cash Right Now? So on that video, one of the reasons I stated that I'm holding cash is because I want to take advantage of an opportunity just in case the stock market crashes. Then I got a comment from a fellow YouTuber by the name of Jack, and he stated, I like this theory, but I don't want to be like some of the people I know that sat on cash in March, April of 2020 because they expected the Dow Jones to go down below 1500 and they were waiting for that for them to start investing. It never did, and they missed out on 40% gains. It's always a balancing act when you're waiting on the sideline versus jumping in. I made the same mistake with Bitcoin. Thought I'd keep waiting before I jump in. It's $50,000 now, basically. And when I read that comment, I'm like, you know what? I gotta make a video talking about this. And we're starting now. If you guys love to talk about personal finance and mindset and you want to help support the Urban Lifestyle channel, start now by hitting that subscribe button, hit that notification icon so you guys get future notifications of my future videos. And to all my thumbs up squad out there, maybe you're not in the thumbs up squad, but please leave a thumbs up on this video. It's really helpful in getting this video out to other eyeballs. And at the same time, make sure you guys leave your comments down in the comments below. Now, when the stock market is crashing, it's very hard to realize, hey, you know, maybe I should keep waiting before I jump in. Maybe it's going to go down to this price. Maybe it won't. But a lot of people did take advantage of the March 2020 downfall in the stock market. But on the other hand, a lot of people really didn't as well. And they missed out on a lot of gains, expecting the Dow Jones to fall way below 1800, but it never happened. But to be honest with you, in my opinion, I do believe there's a little bit of prepping work that has to be done before you even know there's a stock market crash on the way. One of the things that I really like to do to prepare for a market crash is I research companies, and I'm talking about I research companies and just keep them on the watch list. I may have researched a company and I may like all the credentials that the company has, but the valuation is a little bit high, and I'm like, you know what, I'll keep an eye on this, and just in case anything happens or in the short term it actually lose on value, I may see a great opportunity for me to buy that company. Now, in 2019, I had a whole bunch of companies on my watch list that I did the research beforehand, and maybe I just didn't want to get into them just then. But when the 2020 market crash came, I was like, hey, I mean, these are some real good prices right now. So maybe I should buy in. So knowing a little bit beforehand about a company before a stock market crash can really help out in the long run. I have tons of companies on my watch list that I'm still doing some research on, and I'm just waiting for an opportunity to buy in. Now, that doesn't mean if that stock specifically is just crashing, I should go ahead and buy in because I did the research maybe 2 months ago. There's a second step to this as well. I have to figure out why that company is crashing. Now, in recent examples, as far as the 2020 stock market crash, we all know why the markets was crashing because everybody was unsure of what's going to happen. So I had to do a little bit more research on the companies that I wanted to buy before I bought in. A great example of this is Carnival Cruises. The cruise line was completely shut down for the entire 2020. And at the time of this recording, they still haven't recovered just yet. So before the stock market crash, I felt Carnival Cruises was a great company. I just said, hey, you know what? I'll buy them when they're a little bit lower. Now, the stock market did crash, and what did I do? I didn't buy them. Reason being is because they have a long way ahead of them. Now, once they start opening and they're at a fair price, I may be like, hey, let me look at it, and maybe I'll buy it. But the business model was devastated. Versus, I did a little bit of research on Facebook and Apple. And when it comes to Facebook, I was like, everybody gets to stay home. How many people is on Facebook right now? There's a lot of people on Facebook, so maybe they'll still be good. But at the same time, that's not how Facebook make money, do they? Facebook makes money by people paying for advertisements. So I had to look, do I believe that people are still gonna advertise on Facebook or not? So I did a little bit of calculation and I realized, yeah, you know what? I think I should go in on Facebook. Same thing with Apple. Now, of course, Apple has a different business model, but doing my research, I decided, hey, Apple's a great company to invest in. So for a quick recap, one of the first things I'm looking for when the stock market is crashing is, hey, have I done the research on a company before the stock market crashed? Next thing I want to know is, why is the stock market crashing, or why is that specific stock crashing? Then you want to go into the next thing is, can this company survive what's going on as far as maybe it's a recession? Do they have enough on the balance sheet to last them for a recession or for a pandemic? Do I believe that that company's business model will thrive in a new economy? And what are the chances of that company going bankrupt? Now, once I have an idea of those three fundamentals, like what is the company? Have I done research on them? What's the reason for the stock market to crash or for that company to crash? Can that company survive or will it be demolished or go bankrupt? We go into the next phase. Me personally, I never want to wait for the bottom because I don't know where's the bottom. In 2020, I bought in when the Dow Jones hit 20,000 and I said, hey, you know what? If it keeps going down, I'll just buy more. And yeah, it kind of hurt because I didn't know what was going to happen. But at the same time, I wasn't too sure where the bottom was. So I honestly just made a decision to just buy these companies that I truly believe in the long term. And if it goes down even more, I'll buy more. So I told you, I bought when the Dow Jones was around 20,000 of last year. And then I bought more when it went below 19. And right as it went to 18, I just kept buying. And the next day, I was hoping that it was gonna go to 17,000 or even lower. And 6 to 10 months later, we seen all-time highs of Dow Jones hitting 30,000 points. So every time I ask somebody, hey, did you buy any stocks in the dips? That's when they'll tell me,
nah, I was kind of waiting for the bottoms.
and did you happen to catch the bottom?
Nah, see, when it hit 18,000, I thought it was gonna go lower, but it never did, so I missed out on some gains.
So to wrap it up, the way I see it is, if you love a company so much and you see that it's falling and the company's core fundamentals are still there, are still intact, and in the future you still believe that that company still possesses long-term opportunities, why not just buy the dips? And if it goes down even more, buy it even more. But if you truly believe that a company has a long-term opportunity ahead of it, and you get that company for a cheaper price, it only makes sense to buy. Thank you guys so much for watching. Make sure you guys hit that thumbs up. It's highly appreciated. Make sure you guys subscribe and hit that notification icon. And make sure you guys consider becoming a member. Thank you so much for watching and have a beautiful day.